we are very happy to partner with Sustainalytics, which is a global leader in ESG research and providing all these scores to various asset managers like us. Just to introduce speaker, Sheila. Sheila is the Executive Director for Strategic Partnerships with Sustainalytics. She's based in New York, and she's going to share her perspective on ESG practices around the world and what we are seeking to do and what we can learn from with respect to ESG for our fund. So Sheila, just to quickly take off from here, Sustainalytics is the world's leading ESG and corporate governance research and ratings agency. Can you tell us more about what is ESG and why is it so important today? Why is there so much noise around ESG? And if you could illustrate with some scenarios, specifically talking about the causality between a company's performance and its ESG orientation.
Sure, happy to. As you mentioned, Abhishek, Sustainalytics, which is actually now a Morningstar organization, does indeed focus on company and country level ESG ratings. And I'm happy to further define this. ESG stands for environmental, social, and governance. These encompass factors that consider risks, impacts, and alignment to the environment, social, and governance ecosystem that contribute to a more sustainable economy and world. And so why this is important, some of the scenarios in which it's important to consider this, is because many of the behaviors we see across investors, companies, and even individuals aren't fully considering these issues as it relates to the risks they face and in general the betterment of this world. But in reality, we see this in our life on a daily basis. So we see things where we're facing resource scarcity, both in our personal lives, but also many companies need to consider those resource scarcities such as water shortage and so forth when they're considering the risks that face them. Other examples is data privacy issues within the tech sector, gender pay gaps all across, lack of diversity in the workplace that contribute to less perspectives when thinking about this new environment and this kind of new consumer behaviors. And so all of these issues are indeed extremely important to consider, not only for the betterment of the world, but also for the risks that companies face themselves when best positioning against their peers. And so for that reason, we do believe that ESG factors are extremely important for investors to consider when, again, choosing to either mitigate their risks, provide positive impact to the world, and also to further align their own investment behaviors with their values. And so that's kind of a quick high-level overview of what ESG investing is and why it's important.
Sure. Thank you so much, Sheila. The other question is, if it is so important, naturally the entire world should have already adopted it. Can you tell us about what are the trends with respect to ESG adoption globally? And we understand that Europe is quite strict about it. What are the trends elsewhere in the world?
Sure. I think there's two trends to highlight. One is that certainly while Europe is indeed embracing ESG investing in very strongly, and as exemplified by the EU Commission putting in their new regulatory guidance, we're seeing quite a bit of ESG activity around the world. Certainly in emerging markets where we're seeing ESG being considered in a variety of reasons, and even in certain cases affecting cost of capital for a lot of issuances that are coming out there. And then certainly in the developed world, in the US and in North America, we're seeing an increasing appetite for ESG investing, both from the perspective of further considering those ESG risks in integrating it into the investment thesis, but also from the perspective of just capturing better impact and values alignment in ESG investing, or in their just general investing standards. So I would say certainly while it's as the first trend, it's increasing and certainly has strength in Europe, it's increasing around the world, and we're seeing more and more attention paid to it around the world for a variety of reasons. I'd say the second major trend that we face that we experience is that ESG is being used in a more robust way across the investment landscape. So traditionally, maybe 5 years ago, 10 years ago, ESG research was very strongly used within that fundamental research process where, it was simply to either choose the right companies, screen out certain companies, and in the most advanced ways, even integrate it into a valuation model. Yeah. Now what we're seeing is that ESG has, while it's still being very heavily used in that portfolio construction phase or, choosing the right companies, it's also further being used across that investment landscape in investment analysis, so really deep portfolio analysis, risk analysis, attribution. And then further, managers are reporting out on that because investors are demanding to understand more of the exposures that their portfolio has to these various ESG risks. And so as a result of that further integration across the investment landscape, we're seeing a variety of audience players, including investment managers, but also index providers and custodians and individual investors and wealth managers, all thinking about how they can further leverage ESG in their investment process. And I think that's been quite exciting for us to see.
Touched upon a very interesting point on how ESG is being used not only by managers and businesses, but also by index providers and custodians and other such agencies. Can you also talk about what is the role of active management in sustainable and responsible investing, ESG, and what are the specific areas where you see that managers or independent managers like us can add value over a period of time?
Sure. I think that as exemplified by the Aditya Birla Fund that was just launched, managers can have a significant influence by highlighting the constituents or companies that are inclusive in their fund and highlighting the particular ESG activities that have made them inclusive, that have made them attractive for inclusion within the fund. And so there, whether you're looking at corporate governance or whether you're looking for whether a company is involved in certain areas or whether you're looking at whether a company is managing certain ESG risks, such as human capital or climate change, it's very important that asset managers report on this so their investors understand why these issues are important and why these companies are accelerating on these issues. And also it's very important for any manager, including active managers, to engage with the companies, have that dialogue with the companies around what's making them attractive, what can make them more attractive. So along with creating the portfolio, I think active ownership, such as whether it be in the form of voting or engagement, is also very important. I think the advantage for an active manager is that they are not only taking a rules-based approach, but they're able to actively understand some of the additive nature of some of those ESG benefits and pick and choose what is most additive per company, what they think is kind of the gap in their regular process and how ESG can further contribute to that gap.
Just to make it a little simpler for our audience as well, since we believe that ESG is more like an attitude or an approach towards investing or doing business, can you help us with a quick overview of the Sustainalytics framework for ESG and just a brief insight into the factors that you analyze and some of these examples, if you can share, on how these factors favorably or unfavorably can impact a company's rating?
What we do in the risk ratings is we assess companies on a number of material ESG related issues, such as carbon risk, bribery and corruption, emissions, effluents and waste, human capital, corporate governance, and many more. And the specific issues that are assessed for each company are based on the sub-industry that the company sits in. Corporate governance, however, we do believe that that's important enough such that all companies across our full universe of 12,000 companies is assessed for. From there, we assess how exposed a particular company is to those particular material ESG issues or those risks based on the sub-industry it sits in, but also based on specific company or company specificities, i.e. their geographical location, their particular product mix, and so forth, and then how well they're managing those risks. And so when you look at, and in management of those risks, we look at the programs and the policies that a company has in place, the management structures that support the mitigation of those risks or the management of those risks and so forth. And so ultimately, the numerical rating that we provide for a company is meant to reflect the unmanaged risk that still remains. So the lower the number, the better the company is actually performing, because the better is the better risk that profile.
So in some sense, it's a risk exposure score rather than only a rating.
Exactly. It's risk exposure. It's two-dimensional. It's risk exposure, how well they're managing those risks. And the lower company means that they're managing out those risks well. And so it's a lower risk that remains. Yeah. And I'll maybe just, if it would help, I'm happy to give an example. Sure. So for example, in an automotive company, if an automotive company had a high percentage of electric vehicles, they may be less exposed to carbon risk than some of its industry peers, positively contributing to their score. But as we look at it in a two-dimensional approach, exposure and management, if that same auto company wasn't disclosing their policies or programs in many areas, or if they had corporate governance issues or human capital issues, that would also negatively impact their score. So ultimately, again, we're not only looking at, their exposure, we're looking at how well they're managing it, and taking those two things into consideration, for us, identifies which companies are best positioned.
A question closer home for us. In your experience, and I know Sustainalytics is a very, very vintaged company in the area of ESG. How have Indian companies performed on risk ratings?
Yeah, happy to speak about that. I mean, the truth is, Indian companies, like companies of many emerging markets, generally tend to score lower across the global universe. And we find that in general, emerging countries tend to have higher exposures to areas like natural resources, and such as steel, oil, traditional manufacturing, and so forth. And which, and in those areas, they also tend to disclose less than some of their developed country peers. However, I'll emphasize that this is a very broad statement. And in fact, if you look at it from more of a best-in-class perspective, so basically looking at the best companies within a particular sector, you will see that India does have some of the top performing companies within each industry that, that are really like leading the emerging markets, or kind of leading emerging leaders within India. So for example, when you look at sub-industries such as agricultural chemicals, or frankly, even within the automotive industry or industrial conglomerates, you'll see that some of those top performers, when I think about the top 5 percentile or top 10 percentile across the globe, some of those emerging leaders do indeed come from India. And so I think, again, India is indeed emerging as some of the best leaders within a particular industry. And I think some of those factors, focusing on corporate governance and demanding more transparency, is really helping this.
Right. So good to see that Indian companies are already making a mark as far as ESG trends are concerned. And from a market perspective, broader market, investing market, or investors' perspective, what are some of the trends that you're seeing in emerging markets like India? And if there is something that perhaps that asset managers like us learn from or can markets to ensure that ESG kind of catches?
Yeah, I think what I'm seeing within the emerging markets quite a bit is indeed that demand for more transparency. And so I think, as I mentioned before, the more that managers engage with the companies they invest in, or particularly really make sure that they help offer clarity to companies around the issues that are most important to them, and thus would require additional disclosures. That's very helpful from that investment perspective. I think the other thing is just the more funds that are being built or created. Again, I'm very enthusiastic and excited to see this new Aditya Birla ESG fund being launched, because I think it is indeed these funds that are being launched offer more education to the market within India or broadly emerging markets around these issues, such that it's not only offering that transparency to companies around what are the most important issues being looked at by investors, but it's also offering more transparency to the general public and to the individual investors around what issues they should be considering and why those issues are important. If you look at, I had a quick look at some emerging market benchmarks prior to coming on to this call. And so looking at the broad indexes versus their ESG counterparts. And indeed, we are seeing that those indexes that are taking into consideration those companies that are managing those ESG risks are right now performing better and are performing better from year to date. So it's important to highlight that and report on that and really offer that transparency such that individual investors or the general public and companies and investors are speaking the same language and having an understanding of the same important issues.
Thank you so much, Shila, for providing this perspective. And this has been very, very useful. I think our audience will also understand some of these global perspectives, as well as appreciate all these inputs that you could provide about ESG, about Sustainalytics, about the entire framework that you follow, and the differentiation that active managers can bring about for ESG oriented funds. So just before we close this, if you could add any last words, any sort of closing remarks for this conversation. It's been really, really enriching for me, at least.
Sure, absolutely. And again, I'll just reiterate, I'm very excited to see the uptick in interest in ESG across the Indian market. I think in general, it really is it's providing a very positive message to the investment market, the companies that are included in the market. And so, I wish this fund all the luck, and I'm very excited that Sustainalytics can be part of contributing to this overall movement of ESG within the Indian market.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.